Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, December 21st, 2021. Santa did finally arrive today after the market initially headed lower. At about 10 a.m., Santa rolled in with his sleigh and the reindeer and proceeded for the next balance of the session. Bought everything. Everything went up and around. So what I continue to count here is a minor C wave decline. That minor C wave will consist of 5 waves of minute degree. So far, I've made an adjustment to the end point for minute wave 1. That is the difference, and that's the labeling that I'll now show you. It's 1, 2, 3, 4, 5. Originally, I had put wave 1 here and wave 2 here. And this would then have had to have been subminute wave 1 of 3. And with the break above this level, it actually didn't break, but it got pretty dang close to breaking above where wave 1 would have started. But the intention of the rally just pushed it too far for, in my view, for it to be a subminute wave 2. So I changed the count in terms of the labeling. And now I'm looking for the completion point for wave 2. Wave 2 will be an ABC. Here's wave A, here's wave B. We've got wave C going. I cannot put the completion point there because I am leaving room for a just continued upside move. In fact, Santa could be hanging around and just continue to push higher. So I'm going to move this down to the 30. Let's take a look at the inside of this wave. And you can pretty much see that it could be at best 1, 2, 3, 4, and now we've got a 5 going. And if that's the case, I would think that we're likely going to get and should hold below this next resistance level, which is going to be at 46.54.50. Once we're there and we get that decline going again, and it starts to break, say, back below the hourly 200, it's going to give us a little bit of support that that is indeed the completion point for wave 2, and wave 3 is beginning to begin. But here's going to be the difference. Here's what is going to tell us that wave 3 is in progress. Again, just reviewing the Elliott observations and the Elliott guidelines that I use that tell me the personality and the characteristics for what a third wave should be like. Third waves, again, are most often the longest and the strongest wave out of 1, 3, and 5. So within an impulse move, we have a 5-wave decline going right now. And then, so wave 1 is down, wave 2 corrects, wave 3 is down, wave 4 corrects, and wave 5 is down. So out of 1, 3, and 5, most often, wave 3 is the longest and the strongest, and is usually the one that will extend. And it usually will extend within the 3 of 3. So you've heard me speak of these terms and use these terms often. So if we are going to be dropping into a third wave, there should be no doubt. It should be quick. We should begin. It should just start to fall. We're going to drop below the 200. We're going to drop below the 4 and the 8. We're going to drop below the 20, below the 50. It should just go. It should pick up speed to the downside. It should start to accelerate. Once we get a wave 1 and 2 of 3, that third wave should really be the power point of going down. And it's that point of recognition where the Santa rally is over and the next decline is beginning. And ultimately, that is still expected. If indeed, when it kicks in, it would be expected to break 45.20. Now, what makes it a little bit more difficult right now is I have to wait for more solid Fibonacci extensions for wave 3, where I can put that comparison of wave 3 to wave 1. Right now, what I can add is a downside view. See if I can get it to work. There we go. Put that down there and then run this up to this high. So now what I'm measuring out is the entire C wave. So those measurements continue to show us that we do have support continuing at 44.92. That's going to be the low right there. This low is also 44.92. So, but that's because that's wrong. So let me just fix this one quick second so that we're more accurate in our levels, because that high is 47.43. So let's put 47.43.25 and say like that. Yeah, changes it just ever so slightly. So we have that initial support where wave C would be equal to wave A at 44.93.75. That I'm not, it's just a point of support right now. I do not believe that that is where this particular wave will complete. In fact, now that I'm putting the bottom of wave 1 down here and the top of wave 2 to be determined, that is suggesting that a third wave will kick in and really begin to take the market way below that level and down into these levels, with the strong possibility that we'll end up right around 42, 44. That I would say with some certainty that if the third wave kicks in, it alone should bring us down to 43.40. I'm going to call it 43.18 to 43.40. But for certain below this level, and I would say below these. And wave 3, again, longest and the strongest. So I'll add to those extensions once we have confirmation that the second wave is complete. Then I can run extensions from the top of the high that we have so far, 47.43.25, down to this low, up to the high of wherever wave 2 comes in. That'll give us the extensions coming off. And that's what I will then look to see where we have overlap, to see where wave 3 then would be expected to bottom, put in a 4, and then there's still a 5th wave down. Again, the whole package is that we continue to work through an intermediate degree A wave. And so within that, we have 3 waves of minor degree, an A, a B, and a C. There's wave A, there's wave B. So the C wave still in progress, still actually in the first 2. So still the 1, 2. We still have the largest portion of that to come. So Santa's rally may continue, and they may push it tomorrow and Thursday. And because Friday is the holiday, that's the Christmas holiday. And then we pick up again, I believe, on Monday. So in any case, for tomorrow, we still have drawbacks to go, but I would be looking for the market to finish this rally. And here are the levels at 46.54, then we have 46.74, 46, excuse me, 85. Then we're pushing against 4,700. That's 47.05, 47.12, 47.36, and then the high. So for wave 2 to get all the way up, it certainly can get to 47.36 if it chooses, if they push hard enough, and still be a wave 2. It just can't exceed 47.43. Well, if it does that, it negates the count and turns something else into action. And I'll deal with it if and when it happens. But right now, we need to just deal with what's in front of us. And that continues to say that we likely are to see some follow through, and then we'll see the market turn. And so the turn, again, should be very recognizable, simply because wave 3s are the longest and the strongest waves. And therefore, if it kicks in, it should pretty much immediately start to break back below moving averages, in particular, the hourly 200, which right now is at 46.29. So it really wouldn't take much of a decline to get it below 46.29. But if it breaks 46.29, I would expect some acceleration. If it breaks then again below the 20 and the 50, I would expect some additional acceleration. And that would start to bring it down to these levels of what we need to see. So this is where I'm going to leave it. The volume actually today was not that bad. Didn't start off great, but it certainly picked up. We had about 1.5 million, nearly 1.4 million in the S&P in the mini contract, and we had nearly 1 million in the micro contract. That's pretty good volume for a holiday week. And so that's why I feel that we just saw a lot of adjustments being made, getting out of certain stocks, piling into other stocks as portfolio managers and hedge fund managers begin to get themselves ready for the end of the year. So I'm going to leave it right there. Continue to trade smart. Use your moving averages. Use the Fibonacci, create and put in Fibonacci in place as needed. And the next update will be Wednesday, the 22nd.